These 2025 pension updates could impact your retirement plans in a big way. Let me show you how to navigate CPP, OAS, and GIS updates to maximize every dollar and save on taxes. Payment dates in 2025. Let's start with something simple but important: when you'll actually receive your money this year. The government of Canada has set a unified payment schedule for CPP, OAS, and GIS in 2025, which means you'll receive your money for all three of these in the same day. Here's the schedule. These dates are usually in the last week of each month, and if a payment date falls on a weekend or holiday, you'll get your money a little bit earlier. And here's a pro tip: for added convenience, set up a direct deposit through your My Service Canada account. Not only does it make sure your money lands in your account on time, but it's also a safer and more reliable option than waiting for a mailed check. Now, here are the updates for Canada Pension Plan, or CPP, for 2025. First is the cost of living adjustment. CPP payments increase annually to match inflation. And for 2025, the adjustment is 2.6%. So for an example, if you were earning $1,000 per month in CPP in 2024, for 2025, it'll increase by 2.6% or $26. So your new monthly payment will now be $1,026. This helps retirees maintain their purchasing power as costs rise, though it's a pretty small increase this year, which is unfortunate. The second change is a two-tier CPP system, which is otherwise known as CPP Enhancement. And this is just a reminder that higher earners will now have to contribute more, and here's how that works. The first tier is known as Base CPP, which applies to earnings up to $71,300, which is known as the YMPE. If you're an employee, you'll be contributing 5.95% to your CPP, and the employer will match that at, again, 5.95%. But if you're self-employed, you'll be contributing 11.9%, which is that employee and employer rate combined. For the enhanced CPP, which is known as CPP2, it applies to earnings between $71,300 and $81,200. And for this, the employee and employer rate are both 4%, which means that if you're self-employed, you'll be paying 8% for this tier. Contributions are capped at $4,429 for incomes over $81,200. Here's a table of what you'll be paying in CPP at various income levels. Note that it includes the $3,500 that is exempt from every calculation. So, for example, if you're earning $40,000, you'll be paying $2,171 in CPP if you're an employee. And note that this does not reach that second tier for CPP2. Then as we hit $80,000, you'll be paying a total of $4,381, which includes that second tier of CPP2 at $348. At $100,000 of income, you've already capped out the maximum of CPP, which is $4,429 for 2025. So why these changes matters is that this new system helps higher earners save more for retirement, with CPP replacing up to 33.33% of lifetime earnings, which is up from only 25% of lifetime earnings. Think of it like you're upgrading to a premium subscription. You contribute more now, but will enjoy better payouts later on. I go over the CPP enhancements in way more detail in this other video of mine, so check that out. Old Age Security, or OAS, updates for 2025, and here's what's new. For the cost of living adjustment, OAS payments are reviewed not annually, but every quarter to keep up with inflation. For the January to March 2025 period, though, there won't be an increase, as the CPI showed a small dip over the last few months. But don't worry, over the past year, benefits has still grown by 2%, which helps seniors keep pace with rising living costs. And here's the OAS Clawback threshold update. The OAS Pension recovery tax, which is commonly known as the Clawback, requires higher income seniors to repay a portion or all of their OAS benefits if their net income surpasses a specified threshold. For the period from July 2024 to June 2025, this threshold is set at $90,997. And seniors with net income exceeding this amount are required to repay 15% of the excess. Here's an example. If your net income is $100,000, this repayment would be 15% of the difference, which is $100,000 minus $90,997, which equals to around $1,350. To minimize the impact of the clawback, you can use strategies such as income splitting or using your tax-free savings account, which can help keep your net income below the threshold. There's also the increased OAS pension at age 75. So seniors age 75 and older receive a 10% increase in their OAS payments, a measure introduced in July 2022 to address the financial challenges faced by older seniors. For the January to March 2025 quarter, if you're age 65 to 74, the maximum monthly payment will be $727 for OAS. And if you're age 75 or older, the maximum monthly payment increases to $800. Guaranteed Income Supplement or GIS updates for 2025. The GIS offers financial assistance to lower income seniors in Canada. The updates for 2025 are keeping up with the cost of living. GIS payments also adjust every quarter to match changes in the cost of living. For January to March 2025, though, the maximum monthly GIS payments for a single senior stays at $1,086, as there wasn't a CPI increase over the last quarter. But here's some good news. GIS benefits has also grown by 2% over the past year, from January 2024 to January 2025, which helps seniors keep pace with rising costs. There's some updated income thresholds for GIS. Whether you qualify for GIS depends on your income. For the first quarter of 2025, the annual income limit for a single person is now $22,056. Retirement planning is about making the most of every opportunity. From CPP to OAS and GIS, it's really important to stay informed, which can make a huge difference in your financial future. Visit our website to download our free guide on saving taxes in retirement. The link is in the description. And while you're there, explore our financial planning services if you want to create a plan that's tailored just for your retirement needs. Please like and subscribe for more expert tips on retirement, and thanks for listening.